This is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, December 3rd, 2019. This will be largely a recap of the video I did earlier today for members, as well as the charts that I posted throughout the day. So there's not much more to report that I didn't earlier. If you want to watch this, if you're a subscriber to the site and you want to watch the video, fine. I'm just going to really go over the levels that should cap this bounce, quote unquote, if there's going to be any more upside. And of course, I'll recap what happened over the last couple of days. So to start out, let's just go back to the charts I posted yesterday. This was posted yesterday. You can see a screenshot down here. If I can zoom in there. Yesterday about 2:15, posted that we had these potential bear flag patterns setting up in the indexes, SPY, QQQ, futures, and at that time I said, my preference and one strategy would be to take a half a position at the top of the bear flag pattern, and then you get a sell trigger on a breakdown of the flag, an impulsive breakdown, and you could then add it to a full position. And I went on to show the measured target, which is if you take the distance of a flagpole. Let me show you something here. Okay, there's a bear flag pattern. That's how they look. You have this initial decline down. Three criteria you want to see: an impulsive, nearly unidirectional move down like that, and followed by flagging action. It doesn't state it here, but as I mentioned on the site yesterday, ideally what you want to see, this is impulsive, so it's on high volume, the drop, followed by an area of consolidation that works its way slightly higher on decreasing volume, then followed by an impulsive breakdown. And the measured target, you take the distance of the flagpole, that move down, add it to the top of the flag, and that gives you your price target. So pretty straightforward, fairly easy to recognize patterns. And like anything, they always don't all play out, and that's why said that you need the sell signal. And I mentioned yesterday in the video that towards the end of the day, in last night's market wrap actually, for members, that if we gap down, which was a good chance today, that's the ultimate form of impulsive move. So let's just go on and see what happened there. So that was this morning, and as I mentioned in pre-market, this chart was posted here about 7:30 this morning, a couple hours before the market opened. There's your breakdown here. Let's zoom in nice and tight. This shaded gray area shows the pre-market trades for QQQ. So in other words, we closed right there. Let me grab this arrow. Here's yesterday's close, and so futures traded throughout the night, kind of consolidating that range. Opened up, QQQ opened up here in pre-market trading, continued in the flag. So you had a nice objective, short entry shortly before the open right there. And that was your trigger, that big red impulsive candle. And so at that point I said that opens the door to a drop down to at least that 199.80 target. Remember, 199.80 is that comparable level to the big, what I thought was pretty big, 8,200 level on NQ NASDAQ 100 futures. I've been harping on for weeks, saying that until and unless the market breaks that, we're probably not going to get any pullback. That's why we're waiting for the sell signal to come. So that was then, and again that was 9:40 right after the market opened. And then let's go on to what happened. Oh yeah, the next one here. The target was hit shortly after that. This was taken right here at 9:40, and you can see there it is. So you have the measured target, which again is the distance of lag, and it was a perfect. I mean, if you look at the measured target there, it was right down to where we went, hit that 199.80 level, and at that point, I stated, we're probably going to get a bounce, a reaction, at least a minor bounce is likely. And I mentioned that active traders could reverse what I did, reverse cover your shorts, reverse the long for the bounce. And I figured to go to at least the minimum target there is at that 263 level. So that was what happened, and I still believe there'll be more downside. But let's pick it up and let's see what happened again from there. Let's see what happened. Okay, so this is it. Here's the same chart. Here's your measured target right here. This line, flagpole added to the highest point of the flag. Perfect, textbook example of the way that one played out. There's a gap down, but again, we're not showing the pre-market trades right now here. There, Q's started dropping in pre-market, and boom, right there, open gap down, and that was the time not to short, but rather to cover shorts and then go long for, for an active trader for a quick bounce trade. So we've exceeded. We went up, we hit that 263 target, and then we moved on through there. Okay, and I'll jump over to the 1 minute chart right here in QQQ. I posted this. Actually, let me show you how it looked here in the trading room earlier today. These I showed you on the futures for gold members. We had these nice clean ascending triangle patterns setting up. This is ES right here. Oh, you probably can't see it in the video. Okay, here it is. ES, symmetrical triangle pattern, showing a breakout with a long, and saying that was my preference to get a long side breakout. They could break down, and that's why you just have a stop below, and showing a bounce back to 390, and possibly more. Two ways you can take the quick bounce. That's what I did. I just got out quick at the 82.40 level. That's where I closed the, after reversing NQ to long. And or you could let it run, trail stops up. So that was earlier today, and this is NQ right here on the right hand side. And by the way, that's ES right there, and that was about 1 o'clock today. And shortly after that, we did go on to breakout. You can see right here, this is that same triangle pattern here on QQQ. There's the breakout right here, and we back tested. Looked like we might go down into the close. We broke out there, and then we took out the downtrend line right here, but what we did is we came in and back tested the top of the triangle, and we drifted slightly higher, not much. Now, here's the key. All right, so that's all short-term stuff, and I'm going to get to the daily charts in a second here, but I just wanted to say where this bounce, I think there's more downside. Same thing I was saying earlier today, based on what happened. We're getting additional check marks, those bearish things I was looking for. Now we're seeing volatility expanding. We're seeing these big red candles. I'm going to get to the VIX as well here in a second. But at this point, we came very close. That's a natural target to backfill a gap right there. So that's about 201.81. Watch what happens there tomorrow, or if it happens, it's getting pretty late. I don't know if it's going to make it up now in the after-hour session. But that would be your first resistance level at this point. It's dual gaps actually. You have this level right here. You have the bottom right there, that candle where the flag started. You have a gap right here. You have a gap right here. Quite a few reactions. That's a pretty big level, about 201.81. Ideally, if you went swing short anywhere in here, short for a swing position, that is, that's the ideal place to hold on. Now, I mentioned this earlier to members in the last video. It all depends on what you're targeting. There's a potential for a lot more downside. Right now, the trend has been very, very strong. They've been buying dips, it's been resilient. Sure, we've gotten a couple big red days, and I do believe there's a good chance it's going to morph into something more. In other words, I'll say it, I don't think the correction is over. I think there's still another leg down. But where I really would see this, the case for a much larger correction, or another way to say it, if QQQ takes out this level here, about 203.70, it's going to have taken out the bear flag. It's going to take this minor resistance, and it would most likely open the door to new highs. Now, of course, that's in a vacuum. We're going to look at SPY and IWM before I wrap this video up, but these are the levels. This would certainly right here call this move down into question, my scenario with another leg down. Anything much above that, and by here, pretty much eliminate it. But again, we'll have to look at the charts at the time. I always say the charts are dynamic, so is my analysis. What do they look like? What are the 60-minute charts, the daily charts? What do the individual components of QQQ look like at the time? Maybe QQQ gets there, but you have some of the top components coming right up to a solid resistance level at the time. So, but right now, like I say, I favor this move being contained here at about, they'll call it 202. We'll round it up right there on QQQ. As far as the daily chart goes, you have this wonky candle right here today. It wasn't just, this is TC2000. There were some other charting platforms that printed it. They took it away on their 60-minute charts and that I was just showing you, but it's still here. Coincidentally or not, it comes down to where the pullback I'm looking for, down to about that. I have this trend line right here. I don't know if you can tell. This one's a slightly down-sloping trend line right here. This is where QQQ broke out. And then I have a horizontal price level just above that, about 195.37. Excuse me. There was a breakout candle, pretty impulsive through there, back tested, and that was the previous highs. You had basically about three failed attempts here at or around that 195.37 level. So this is the breakout in QQQ. Now remember, once again, This didn't really happen. It might have been a single print that occurred away from prices, but pretty much this is where we stopped today. And that was also the level I was highlighting recently. I had this heading in since at least last week. The 236 level is support. So that's pretty much it. We closed down on support. The takeaway is now we've had another red day. Down, we closed down. Yes, there was a nice recovery rally off the lows, but QQQ still closed down nearly 0.8%. What it also did today in doing this, and this is what I've talked about, when you get these low volatility grinds, everybody becomes complacent, and I say this often, stocks tend to fall a lot faster than they rise. What this has done just in the last few days, since Thanksgiving really, we started the week. I put up the post-Thanksgiving stats recently. I did that last week. Just show you what happened the day after, starting with the day after Thanksgiving right there. And even though we've been in a bull market, I went back, what was it, 5 years, I think? 5 or 6 years? 6 years. Half the time, the initial move, the first, 3 or 4% move was down instead of up. And so far that seems to be the case here, at least a good part of it, maybe 2.5, since that time about, I don't know, dropped about 2.5 or so percent. All right, so what it did, these last two candles have wiped out. I'm going to go back here. This was Thanksgiving right there, or the day before Thanksgiving. And we've really wiped out all the way back to about the last 3 weeks of trading. Last 3 weeks of gains have been wiped out in not one fell swoop, but just two, really 3 trading sessions since Friday. And now, so this is really a level where the buyers need to step in. Otherwise, and I still think it's going to come back down here. Now, this would be if and when we get there. Look, if we don't get there, it just shows you, wow, there's just a strong bid in this market. If the market just does this, it's not ready to roll over yet. I'm going to say that now. We're coming up to seasonality. You get December, typically a strong month. People are crying for the Santa Claus rally. And then January, you get the small cap effect with the small cap stocks, not always, but historically rallying. So that would be quite bullish. So let's just say if that happens, then of course this is all out. However, I'm looking for this. If this happens, this is going to be a very big level. Again, take everything away, take all these trend lines away right here, and what you have is that is the previous high right there in QQQ, right here, coming back. And again, I could have that line just maybe a little bit lower there. Boom, 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 finally broke out. So should we go much lower? Breakouts, I always say this, it's not unusual to see a back test come in and go slightly below the level and then reverse. That's what the bulls want to see. Depending at the time, I may go long there. I don't know yet. We'll see what happens. It's probably going to happen quick. I'll say that too if we get there, because volatility has expanded. This little low volatility grind in the short volatility trade has been popped. I'm not going to say it's completely burst, but we'll get to the VIX in a second. And so my expectation is, just like the last couple days, we'll probably see impulsive selling. Okay, sorry, I had to pause the video there for a quick phone call. So anyway, we'll see what happens, and those are the levels I'm watching. Again, anything much more than that, a move back down, let's say much below 194, especially impulsive. And you want to watch SPY as well. SPY failing the back test, that will mean QQQ has failed the breakout. And speaking of that, well, let's roll into SPY. We'll hit on IWM. We'll wrap this up. All right, so SPY, kind of a busy chart here. Let me clean this one up. Okay, here it is on SPY. You can see it pretty clear, and that's levels about right about 302. We had 302 were the previous highs. Made a run at it, slightly higher high, failed on both attempts, popped it intraday, couldn't hold it, and then finally broke out. And as I said recently, it was a very unconvincing, non-impulsive breakout. Couple small candles, and we kind of drifted higher on extremely low volume. That's why I thought the breakout was suspicious, and still do. It hasn't failed yet. So I'm trying to give you something here for those that see the glass half full and looking to position for the look where to position for the next leg higher. Can't guarantee if we get there, but if we do, 302. That's where I'd be stepping in, and maybe I will be. And I'm not really more of a QQQ guy than SPY, but now much more than that, especially impulsive, that would be a failed breakout, and fewer things in trading and investing are more bearish than failed breakouts. So And we're going to watch this level on SPY. We're going to watch it on QQQ. And IWM has a comparable level. Before I get off SPY chart, let me just show you. Here's that flag on SPY that I pointed out yesterday. This is, again, the flagpole right here. That's the distance down on that impulsive move added to the top of the flagpole, and that was a measured target on SPY, which you can see was hit. Now it exceeded SPY gap down and exceeded the measured target, but hit this level I've had here for at least a week, that 307.25 level, which was one of the downside targets I had the arrow brakes on, expecting a reaction if and when we got there. Now you can see we bounced back right to this 309.60 level. I may have added that. I can't recall if I put that in the earlier video for members, but there it is. Pretty nice resistance right there. So this could be the end of the run. It's certainly a resistance level. If not, then the next level up, kind of like QQQ, you have the bottom of the flag, and you also have there's actually a pretty nice price resistance level. So that's a pretty big level that ideally, again, for the bearish scenario, should cap this advance. There's your previous reaction low from the right here from the bear flag pattern, and there's a lot of price reactions right here. Reactions from above, broke it impulsively. Reactions from below. So 311 is definitely an important level, and there, of course, just above it is the top of today's gap. So let's just say this is the no-go range. If you're swing short, ideally any bounce I think should be capped there. And then if you go above there, it really chips away at the case for more downside. To my targets, I maintain, I didn't even mention earlier, I still have these targets here, 302.54 on SPY, near-term pullback targets. Again, there's a potential for a lot more. I'm not even talking about my longer-term downside targets right now. Let's see if we hit these near-term targets, which again, 195.37 or so, or that downtrend line, more so that downtrend line, in that target zone that I have on QQQ, about 194.40 up to about 195.70 or so. All right, that's that. IWM, same story right here. IWM has technically failed to break out, but again, I wouldn't read too much into this, and I talked about this last week. I said I may be going long. I said I didn't take the breakout. Mentioned that last week because I said I thought it would fail, and that I might be interested on a back test here of the 159.41 level. I'm holding off now based on everything I'm just showing you about the large caps, and wouldn't be surprised to see this fail, but it hasn't failed yet. So let me just make this very clear. If you are bullish, this is certainly an objective level. As I said, many back tests when you break out of a key level, and it's not 151.41, it's 159.41, not a hard level. Call that about 160 down to about 159, because you can see when you zoom in, some of these candles, were a little bit above. We had this failed breakout back here I talked about, and that took us down to the bottom of the price channel. So the way I see IWM, I'm going to strip everything away. IWM, since the V-bottom, into the December 24th lows, almost the entire year has traded in this range right here. It's a very clear, unmistakable sideways trading range, capped, bounded by about that 159, 160-ish level. And we had a failed breakout here. In fact, every time except this time. That time we came about 2/3 or so of the way down in the channel, but every other time we hit the top of the channel, you can see we went back down to the bottom. Now, this channel is getting very long. That's a very long, that's all year long. We're in December now, so almost a year-long sideways consolidation channel. It's not going to last forever. My guess is it's either going to, we'll have a reversal soon, and the breakout's going to stick, and IWM rallies, and the market rallies into year-end and maybe into January, and I'll say I'm slightly leaning that way. We fail the breakout. If we fail the breakout, there's a good chance we're going to come down pretty quick to the channel, the bottom of the channel that is, and my guess would probably at that point, after a failed breakout, take it out to the downside. So we'll take it one day at a time here. As of now, I don't care to short IWM. Maybe I'll go long soon. Maybe I will short if I see additional downside. If I see the SPY QQQ break down, IWM come down, and the level that I'm really watching just below, see these recent reaction lows here? I put the crosshairs there, about 157. Ideally, that's about as much as any back test should overshoot the top of that range. Anything much more than that, and again, is it impulsive? How does it look if we get it? Otherwise, if you're looking to buy that breakout in IWM or go long in IWM following the breakout or add to it, I think this is today where we're at, or tomorrow if we go down just a little bit more, not much more. I think that's an objective long entry with a stop not too far below. I'd rather wait and see what happens the next couple days myself, but I could certainly say that's subjective because your risk reward, if you're stopped out, you give it a 1, maybe 2% stop, and your upside potential, especially if IWM clears that old high right there, you're talking over 11-12% or more. Okay, and finally, let's talk the VIX. As I mentioned this would have been in the subscriber video yesterday, but I've covered this many, many times in recent weeks on the public channel, YouTube channel as well. This is a big support zone. This is a support zone, and it even goes back past. There was one period where we got lower than this. I'll roll the chart here. Back in leading up to the 2018 highs, never ever in the history of the VIX has it ever gone this low. That was an extreme low, and you can see when you go back before that, back in the early 2017 and beyond, again, this same support zone I have here, this has always contained, or at least in recent years, contained all pullbacks on the VIX. And so I've talked about this recently, come down to that level, and we came very close, but we didn't hit it till, look at that, till the week of Thanksgiving. We hit it on Tuesday the 26th, and then again Wednesday we were at the top of the support zone, or right within the top of the support zone there. So we just hit it last week, and as I've been talking about for a while, each and every correction that we've had this year, all the major corrections, the biggest corrections so far in 2019 have all occurred shortly after the VIX fell to that level right here. It hit it right there and right there, and I didn't leave any out. That's it. And the one on the drop in October started from there, but as I said, sometimes you hit it and you hug it for a while. That's possible too. However, if you see this, what happened here, look at the move over the last 2 days. The VIX has exploded off that level, and so that is indicative of this. We had a move here, we had a move here, and given you can go back and see how far the corrections. They weren't huge drops in the market. We haven't had any very big drops so far this year, but those were the biggest drops. And again, I'm looking at the candles over the last few days, and they mirror these moves right here, and it also mirrors this. So here's the thing, guys: is this going to be, are we almost over? You can see after that, the VIX really, had another day or two of gains where the market was continuing to sell off. Is that what we're looking at? Or is it maybe the start of something more? Way too early to tell. Certainly priced into the charts. When I look at I'm not going to take time right now to go to the monthly, the weekly, dailies, but nothing has changed on those charts for a long time as far as the divergences, the overbought conditions that have built, the key trend lines and other things we're watching. There's still some work to be done to make the case for a larger correction. Right now I'm just looking near term at those near term targets that I talked to you about. I showed you a minute ago, QQQ, SPY. If and when we start to get there, I will I'll share my thoughts as to whether it looks like it makes sense to cover, maybe go long for the next ride up, or to sit tight. Like I say, there's many ways to trade this. You can go for, try to bat some singles. That's, this would have been a single today. If you shorted here or anywhere in here, covered there, that's batting a single. If you want to go for try to hit a double or a home run or even a grand slam, then what you do is we've seen volatility expand. We go back to that daily chart. There it is. We have that divergent high. Same divergence that's been building, same divergence that shows on the weekly chart, and longer term targets. I have QQQ coming all the way down here. I think that'll happen sometime over the next 12 months or so, and that's about a 43% drop. So when I refer to trying to hit a home run or a grand slam, then what you do is if you have a nice short entry here, just set your stops. I gave you levels, tight stops if you want them, and let the position ride. One thing about it, when volatility expands, you're going to get these back and forth moves, and they go both ways. You can have a big 1% plus day soon. So you're going to have to, if you're targeting those long-term targets, you need to give it wider stops. Otherwise, you keep your stops a little more tight if you're targeting just this near-term target zone, and you would either do one of two things. if and when it gets down to this target zone. As it starts to approach it, if it does, we'll probably be heading down into it pretty fast. That'd be my guess. Coming in pretty quickly, coming in pretty hot, some red candles, impulsive selling. And so at that point, you get close, set a stop a little bit above there, and you can let the position ride in case we break through there. Otherwise, you can set a order to cover. You can reverse if it hits there. I'll only know if and when I see it, if we start to get there, what I'll be doing. But if I do reverse, then I'd have a stop somewhat below, and maybe I'll most likely try to play a bounce off that level if and when we get there. But again, that might not even happen, so I'm going to wrap the video up here. We'll see what happens tomorrow. Watch those support levels, which by the way offer objective short entries on bounces back to the ones I just talked about here, like 201.80 or so, in the levels on SPY, and we'll pick this up tomorrow. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.